Welcome back, everyone, to another Stock Market Open live stream. Today, we get to review the Producer Price Index, which is honestly one of the more boring releases, but it's important enough to cover it. It can move the bond market, it can move inflation expectations, and it is a component in the PCE, which is the Personal Consumption Expenditures Gauge, which is the Fed's preferred inflation gauge. And so we will get to cover all that together. And that will be out in about 3 minutes here. Now, the good news is we're going to be looking at the reaction from the market, hopefully to lower yields here or lower inflation numbers, but we'll see. We did also get bank earnings this morning. I've started going through some of these, started seeing some higher than expected charge-off numbers than what we'd usually see, but I guess TBD on exactly the details around charge-offs. The JPMorgan earnings call is just now beginning, so we'll see what happens here. In the meantime, we're going to go ahead and pull up the estimates for PPI, and let's see what we end up getting. Hopefully we get a nice low read to offset some of the warmth in the CPI report we got yesterday, at least somewhat. I think it's kind of exhausting to have markets believe that there's a chance that inflation is somewhat more sustained than it thinks. So we will see. So it is, let's see, what do we have here? Current expectations for PPI. All right, let's write these down and we'll start getting through some of this data here. It's going to be a lot. Tesla in pre-market, by the way, is down a smidge. My thought was they were going to go to 265 or to 220. And it looks like right now you are sitting, you bounced off the 221 level, 221, 222-ish level. And right now you are sitting at about 224, which actually isn't that terrible. It is a drop, but then again, people generally expect to buy the rumor, sell the news on Tesla events. And of course, the lack of sort of EPS gainers for 25, 26 are going to create a little bit of hesitation amongst folks looking for some increasing earnings per share and some growth numbers, especially now that it appears the Model 2 is indeed fully dead. Oh well. So, with that, let's get into the PPI data. Okay, let's write this down here. We got about 30 seconds to go. Now, keep in mind, PPI is expected to come in. PPI month over month, 0.1% expected. PPI core month over month, 0.2% expected. PPI core month over month less trade, 0.2% expected. And then PPI year over year is expected to be 1.6%. All right, who's ready? Okay, okay, that's interesting. Year over year comes in a little hotter than expected. Comes in at 1.8% versus the 1.6% expected. But the month over month came in lower than expected. So the month over month comes in at 0, and then that's interesting. How does the month over month come in lower and the year over year higher? So the month over month comes in at 0, but the survey was 0.1. The month over month core comes in at 0.2 as expected. And then the month over month core less trade comes in at 0.1, which is less than expected. And then you have year over year at 1.8 versus 1.6. How does that happen? And then year over year core comes in at 2.8% actual, and you had 1.6%, or sorry, 2.6% expected there. So the year over year numbers came up, but the month over month was down. Weird.
Number coming in better than expected. Unchanged, but we have been there before. It was unchanged in July. To find a lower reading, you'd have to go to decent at the end of last year when it was minus 1/10. If we look at ex-food and energy, it's as expected up 0.2%, and it's 1/10 cooler than the rear view mirror. Up 0.2. Well, up 0.2 is still a little warm considering we were down 0.2 in July. If we look at ex-food, energy, and trade on a month-over-month basis, coming in a tenth light, up 0.1%. Last month, downgraded from up 0.3 to up 0.2. Up 0.1. Well, once again, if you look at where we were in June, it was only up 0.1. To find a lower number, though, you have to go way back. The last time we had any negative number here or a zero, boy, I have to go back a long ways. You were going back to mid-2020. Now, the year-over-year numbers. 1.8 year-over-year headline, or final demand as we call it. That's definitely warmer than we were anticipating, and it's 1/10 hotter than our last.
There it is. Revision just came in. You did get a slight revision up on the year-over-year numbers on the last for the year-over-year numbers, but the month-over-month got revised down. Weird.
0.4 higher than our last look, which was just revised from 2.4 to 2.6, which now makes it only 0.2 higher. 2.8, well, we're at 3% in June. 3% in June, that's where it comps. And finally, year-over-year ex-food, energy, and trade, 3.2. That is 1/10 cooler than the rear view mirror. It equals where we were in July. But boy, if you look at January, February, March, all three of those were under 3%. So how do you want to slice and dice this? Are we making progress? In certain areas, I'm sure some of the newspapers, just like CPI yesterday, will say, inflation's coming in lighter. They cherry pick which one. And I don't know, when I look at CPI yesterday or PPI today, it looks like we're stalled in the sand in some of them. We're making slight progress in others, but it definitely still doesn't look like a 2% Fed target. So it all depends. How's the market?
Rick's got this obsession with, we're still not at 2%. Hike. We know. We know it like gradually gets to 2%. All right, let's get to the actual report. So so we saw goods down 0.2%, services up 0.2% for the 12 months ending in September. Okay, that's fine. Just trying to go through the actual document here to see what actually rose. A 3% increase in the index for deposit services partial was a major factor in the advance for final demand services. That's banking, basically. And the banks actually seem to have decent earnings today, so maybe those were related. That's very interesting. A 3 percentage point increase in the index for deposit services was a major factor in the September advance. Okay, interesting. The index for machinery and vehicle wholesaling, furniture retailing, desktop and portable device application software, and wholesaling, and airlines also rose. Interesting. Conversely, margins for professional and commercial equipment wholesaling fell. Brokerage, dealing, investment advice also moved lower. Index for goods decreased 0.2. Leading declines were gas, chicken eggs, jet fuel, plastic resins. Services. Let's see. Over half of the broad rise in services can be attributed to services, less trade, transportation, and warehousing. Okay, I don't think that's super useful. All right, let me get some more detail here.
Discussion with Steve. Wish I could have been there. Does the Fed somewhat...
He poo-pooed on me. No, he poo-pooed me.
Yeah, but there's no poo-pooing here. Come on, this is an easy one, guys. Okay, I'm a corporate CEO of a big company. I'm a CEO of a big company. You're my treasurer. Are you supposed to do my bidding? Are you supposed to do your fiduciary job? Okay, if the Fed wants to keep interest rates too low to please their boss, that's not a good thing. They should do what's right for the country. And if their boss, Congress, fires them or changes their edict over that, then we all get to see it. We all get to weigh in with the ballot box. I'm sorry, I disagree with Steve's interpretation on that one.
Well, certainly there were times in the past where I think the Fed really made it easy for these guys and gals to be able to spend whatever they want.
Name a time they didn't. Name a time they
didn't.
So
it would just be beyond the pale to say, hold on, guys, let's take a step back before we get to, 130% of debt to GDP. I don't know. I don't know why that would be such a hard thing to do. But suppose, you know what? If I were the Fed, I'd like to say it's not our problem. We need to hear from Congress. I'd say that, too. That way there's plausible deniability. We got to get to David Seif here. Thank you.
I love all the bickering and the anger that they do. I find it just highly entertaining. Okay, so I mean, to me, these are pretty benign numbers. Like, you're gonna get the fluctuations on your way to 2%. There's nothing in any of the numbers yesterday or today that's like, oh my gosh, inflation's coming back up. Let's get into the JPMorgan news, especially since just right now we're starting the earnings call. So I'm going to start with some of those notes just because I think it's okay. CFO says regulatory and geopolitics. Okay, geopolitics remain uncertain. Jamie Dimon calls a geopolitical situation treacherous. Boy, that's not a word I spell often. Did I spell it right? I did. Oh, wow. That's cool. It's like treacherous. That's how it's spelled. Okay. JPMorgan optimistic about investment banking. Seeing slowdown in consumer yield seeking activity. Okay, interesting. Expect deposits to be flat. Expect deposits to be flat for remainder of the year. Okay. Just trying to get more from their earnings call here. It's ongoing right now. Okay. They say they're going through a normalization of credit charge-offs. They see stable, modest economic growth ahead. Okay. Earnings so far consistent with soft or no landing. That's fair for now. It'd take a while for the banks to really freak out. You really need some catalyst first. Let's see. Consumer still on strong footing. That's good. Okay, that's some more from the call. Expect loan growth to be muted. Okay. Expect loan growth to be muted. Consumer on strong footing. Let's see here. Net interest income on track to keep beating. Let's see here. Physical landscape will be part as long as there's demand. People still like to visit their money. That's fair. Some normalization to come on net interest income. There's some nuances of underwriting, so the bank expects charge-off rates to rise a bit. They still call that normalizing. Okay. Corporate remains optimistic. Okay. Let's see here. They actually grew their employee base 2%. Grew employee base 2% year over year. But Honestly, that's probably because of the acquisitions of the other banks they've done. Probably in part, but then again, banking crisis was early 23, so I guess it depends on the timing of when these bank acquisitions happen. But depends on timing. I'll write down. Okay. Let's see. Not expecting meaningful behavior in card. I wouldn't. Let's see here. Housing basically flat to stuck. Okay. Let's see here. EPS beat driven by higher revenue and expense discipline. Okay. Personal loan growth was decent. Oh, that's good for SoFi. Personal loan growth seen as decent. Gloomy about geopolitics. Shock risk, basically. Home lending revenue up 3%. Home lending revenue up 3%. It's pretty nominal. An $876 million net reserve build and $1.9 billion of net charge-offs. Charge-offs up 520 mil. 1 year ago, this total $2.8 billion provision was $1.4 billion, which is double. Okay. They call it normalizing, which is double. They call it normalizing. Okay. Some higher compensation, headcount up. Inflation is slowing. Inflation slowing and economy remains resilient. Okay. All right. That's pretty clear so far. Let me go to Wells. Those are JPMorgan's earnings. So now we're going to look at Wells Fargo. Wells Fargo earnings. So their credit loss provisions came in lower. $1.07 billion versus 1.34 expected. Let's see here. Net interest income a little bit lower. Office, commercial real estate will take a while to play out. Okay. BlackRock. Their EPS beat and their AUM beat as well. More. Oh, wow. Okay. Interesting. BlackRock. Net equity inflows 74.14 billion versus 29.5 expected. It's a pretty big beat. Long-term inflows, 160.17 billion versus the 100.02 billion expected. It's pretty good. Pretty good for an asset manager here. And I wonder how much of that has to do with like the Bitcoin ETFs and stuff. Okay. That's good. Let's see. Net interest income for JPMorgan may trough in 2025 and then decline. Trough in 2025 and then decline. Monthly PPI reading offers some comfort, they say. As if, okay. Oh. Okay. I mean, that's one way to put it. Okay, let's see here. What else? Oh, let's see what interest rate projections are. Oh, somebody says DJT's on fire. Oh no. What's happening? Oh yeah, it's up again. Look at that. It's up 17% the other day. Now it's up 9%. Wells Fargo up 3%. JP Morgan's up 1.3%. Nvidia, Enphase, these guys are down a little bit. Enphase was down a lot yesterday. We're pricing in an 85% chance of a 25. Let me write that down. Rate projections. So we have 85% chance of a 25 in November. And then we have a 1.8% chance of 25 BP cuts by year end. Okay. 2 meetings left, right? November 7, 24 meeting. And then the other meeting is December 18th. For what that's worth. Okie dokie. All right. Cool. Let's take a listen over here for a moment.
Yeah, it's very emotional.
Damage for the first time.
We're talking about these storms costing potentially $50 billion. Have you put a number on it for your own firm?
It's too early to tell, no. But in Florida, we have a relatively small market share, and we buy a ton of reinsurance, so it can't cost us a lot of money.
How long have you been smalling it? How long have you, the market share you've been, when did you have a big market share? How long?
We've been getting smaller.
In Florida for
15 years.
Been going down.
Yeah.
Can I ask you, I mean, you're pretty good at actuarial stuff, I'm sure, with a lot of experience.
Boring. Let's change the channel.
Each weaving in their unique. This hands-on approach sets our active.
Also boring. Okay. I don't see any update here on what happened with Enphase there. Could just be election concerns. Okay, let's see what else we got here. TD got fined a bunch. Solar demand could surge if Harris wins. Sticky inflation no longer a concern as Fed sparks breakouts. Sounds about right to me. A rare earnings split. Analysts keep cutting and CEOs keep raising. Well, that's interesting. Is that true? Analysts keep lowering the bar. Oh, that's interesting. Earnings for Q3 S&P 500 companies. It says here, analysts are lowering earnings expectations for the S&P. But management guidance is pushing up outlook. Okay. Guess we'll see how it actually plays out. That kind of makes it easy to beat, is the thesis here. Argument, easy to beat now. Interesting. Funny how that works. Let's see here. Restaurant sales recovery delayed on tougher Q4 comps. Falling European auto sales. Yeah, that seems to be a continuous problem. Well, you know, we were reading yesterday about Germany potentially in recession. That was... I think I saved that piece right here. That was this. Oh, First Solar got downgraded? Oh, that might be why. Where was it? Oh, yeah, here. I'll just write a note down from that. So, 2024 growth forecast reduced. Germany may now face a 2-year recession. I don't know that affects much out here, but that is interesting. And I remember they gave a citation yesterday that was skill shortage, years of underinvestment, and excessive red tape per Financial Times. Key. And that was in yesterday's, right? Yeah. Okay. And there was another one. Where was it? Oh, yeah. Greek Central Bank. Or sorry, there's no Greek Central Bank. Greece. Greek? No. Oh, sorry. Rather, Greek Central Bank chief. Who's Jan? Okay, who is this? Hold on. Is he sit on the ECB? Yanis Stonaras. Who is this guy? Greek economist. Get like a wiki for this guy. Okay, so. Oh, okay. Wait. He's on the board of governors at the IMF. Wait a sec. So there is a Bank of Greece? That's interesting, because I thought the ECB took over. That's interesting. Member of the Eurozone. It's part of the Eurozone banking system. I don't know that much about Greece, but I want to find out. Yeah. That guy's been boss over there since 2014. Interesting. Okay, got it. So this is, I guess, Bank of Greece. Bank of Greece chief sees ECB cutting faster than expected as inflation hits the ECB's 2% target earlier than expected by mid-2025. I mean, that makes sense. Yeah. All right. Very well. So, what else we got here? Pre-market, Nasdaq's down a little. See that there. Dow is basically flat along with the S&P. We've got, what else we have? Oil's down 73. Gold's actually up again, 73 basis points. Both of them 73. That's interesting. Okie dokie. Oh, what is that on? Oh, okay. All right. Anything else from JPM here? No, not yet. All right. Canadian jobs report was apparently strong. Oh, that's interesting. Also frequently volatile, but let's see what happened in Canada. Full-time employment up 112K, most since May 2022. A dip in participation, though. That's interesting. Reduces chance of 50 BP cut in Canada. Now I want to see that. So let's go. Data, Canada. Oh, we do get University of Michigan today. Net change in employment for Canada. Wow, only 46,700. That's still better than the survey of 27K, though. Yeah, the participation rate did tick down 0.2%. Huh. Part-time employment actually went down 65K. Ah, that's interesting. All right. Okay. So, what else do we have here in news? Find out. Doesn't seem like much. Let me get to CNBC's. See what they're talking about.
Would give you pause? Is it looking at the economy, the potential for a downturn down the road?
So I think all the kind of the obvious examples would be credit, first of all, change in consumer behavior, any macro shock, of course, and then, we're monitoring rates as well in terms of the outlook for next year and how the Fed policy is going to play out.
Yeah, we saw PPI this morning, CPI yesterday. Still trying to figure out what the Fed does next. Will it spook you if the Fed leaves things unchanged, lets it go?
We try not to get too short-term focused in playing the pinball of rate expectations, but I think what they've laid out and what you see in terms of the inflation picture going forward is a pretty steady unwinding of the rates, and we'll see how that progresses over the next year. But all in all, I think you've gotten a flattening of the curve, no more inversion, and that should lead to a better environment for the big banks.
Okay, well, great. Thank you a lot for joining us today. We appreciate it.
Thank you for having me.
Let's take one more look at the markets before we hand things over to Squawk on the Street. You will see the futures at this point basically flat, a little bit weaker. Dow off by about 12 points, NASDAQ down by about 65, S&P futures down by 3 points. The Treasury market, we're continuing to see the 4-year or the 10-year just above 4% at 4.09, the 2-year just below at 396. Okay, that's going to do it for us this week. It's been a fun week. It's been interesting. We hope you have a great weekend, and we hope to see you right back here next week.
It has been an interesting week. Disney, I guess, is raising prices 5.9 to 6.5% for their parks.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Keaton here with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are a bit soft as financials kick off their earnings season with some outperformance. Watching reaction to Tesla's Cybercab. Headline PPI comes in light, matches the lowest print of the year. Our roadmap begins with the big banks, JPM, Wells, and BlackRock crossing the tape. Jamie Dimon says the economy is resilient, but warns on some geopolitical risks.
BlackRock CEO Larry Fink is going to join us this hour. Plus, Tesla shares are, there he is. Tesla shares are under pressure. Why? Well, Elon Musk's razzle-dazzle robo-taxi unveil seems to have failed to impress investors. And the bull run turns 2 years old tomorrow. The S&P is up 61% since that bear market low in October of 2022. Carl.
Let's begin with the reaction to these quarterly results from the big bank. Maybe the biggest surprise is this NII.
All right, we kind of went through some of that. Okay, so let me take a look at this here. This is interesting. So this one's on Amazon. Amazon's costly space race is limiting profit margin hopes. Amazon's earnings machine might be taking a breather. For how long is the $2 trillion question? E-commerce giant's market cap has stayed below that level since its last earnings report. That report contained a disappointing operating income forecast for the end of this quarter. It isn't unusual. They're typically conservative with this. But the company's revenue growth in the second quarter also fell short. Spending big on AI. Earnings powers of particular importance. Cloud computing has boosted them. Let's see here. Okay, now they're spending money on a low orbit satellite network. They're trying to basically compete with the Starlinks. I did not know that they were trying to do that. How interesting. Satellites require a lot of upfront investment. Cooper is likely to put a cap on margin expansion at the same time as Walmart's becoming more competitive to them. Global PC sales in the third quarter slipped from the same period last year. Wow, so much for the AI PC moves, huh? According to IDC's tracking, PC shipments fell 2.4% year over year. Oh, that's interesting. AI PCs are not boosting demand. Like, why does that not surprise me? I mean, you can get the Copilot app without having to get a new PC, you know? Let's write down some of those. So PC demand down 2.4% year over year per IDC tracking, suggesting AI PCs aren't helping the slump. Amazon per WSJ profit may be capped for now. Well, profit margins rather. Due to Cooper, Amazon's low Earth satellite network, or I guess it's low orbit network, taking large capex. All right, interesting. Okay. The kicker is SpaceX will launch them. Is that true? That's interesting. Cooper, SpaceX. Let me see. Oh yeah, you're right. Amazon's Cooper project secures 3 launches with SpaceX. Interesting. That is ironic. That is very interesting. And it's kind of like you're launching your competitor to space. Huh. I mean, I guess they'd get to space one way or another. And if you could finance more operations at SpaceX, you may as well, huh? What is this? AI sparks talk of power bubble. Yeah, I'm not such a believer that the power usage is going to be this crazy high from AI, mostly because I think these chips will just get so freaking efficient, and you'll actually have too much redundant capacity in. Stocks of independent power producers at the time fetched multiples higher than expected earnings of regulated peers, blah, blah, blah. This was a reference to the past during the .com era. While power demand looks set to inevitably grow, the magnitude of timing is the open question. Well, yeah. Interesting. I just think it's interesting to kind of take a peek at this stuff. Some of these older things you just sort of miss. Circle K owner makes fresh offer for 7-Eleven parent. Oh, okay. Gonna conglomerate them. OpenAI to open Singapore hub. Whatever. Bezos faced a lawsuit for not choosing SpaceX at first. His board sued for not choosing the best and most cost-effective platform. Oh, that's interesting. That is very interesting. It's been years since I saw someone reading this. Yeah, I mean, the news does change very quickly, but there's a lot of information that if you only look at headlines, you actually kind of miss, you know, because then you're only focused on like the sizzle of the steak, and you're not actually eating the steak, and you miss a lot of interesting perspective. Jamie Dimon says cash is very valuable in a turbulent world. Okay. All right.
Spans all our lives,
Well,
and
time to change your tune,
that
partner.
tends you towards periods of brief euphoria followed by despair.
Does he recalls Queens?
Yeah, he does. He fully acknowledges Queens guy, tough
I've got
guy like
ideas
me.
for
Yeah,
him.
I followed
have
in his
ideas for him.
footsteps.
But anyway, I do think that this is so typical that someone jumps the gun. You can't jump the gun because Jamie Dimon's not a hype artist, and he's going to say something that makes you feel that the world's uncertain. And,
By the way, we should point out, Jim, that the stock is still performing better than it has the last couple of times it reported earnings.
And that's
because
what-
our viewers certainly may recall, it dropped significantly.
Well, I just think that the first move is always the wrong move.
And then made that up, by the way, as you see, didn't last for long.
You know, Charlie
it's not
Scharf-
quite at all-time highs, but not far.
Could you not wear a tie for today? Charlie Scharf.
I don't wear a tie every Friday. You know that.
Jensen Huang doesn't either, and he's richer than you.
Well, about 106 billion
he doesn't watch the
times
stock.
richer.
He doesn't watch the stock. Trust me. Wells Fargo. He doesn't. But Wells Fargo, okay, people have to understand that Charlie Scharf came in. Still got the asset cap. Maybe he got a little bit of break, although I'm sure he doesn't want this. For TD's got the asset cap now. But you're seeing stocks react to PPI interest rates. And what I'm urging people to do is react to the earnings. And Charlie Scharf has bought back something like 20. I was doing the calculations this morning. He's bought back 22% of the shares since he came in. And he bought back a huge amount of stock this quarter, even though he said, well, maybe not. Didn't need to buy that much, $3.3 billion. This is the guy who is the modern day, my stock's too cheap. Jamie, on the other hand, said, listen, we're not buying back our stock here because it's not. So Charlie Scharf is making a statement. He's making...
I'm listening to you. I am looking occasionally at my phone because, unfortunately, that is the way that people communicate. And if we want to be in real time, I need to look at my phone.
Look, David,
okay?
when I look at the wealth management line, and when I look at I got to get rid of the cows. I got the cows there.
You fully acknowledge we get texts from people who we need to see what they have to say.
Candy Crush.
Well, yeah. I
Never played that game in my life.
I'm trying to explain why Wells is up when it was down badly at the opening.
And if I'm not fully paying attention to you, you start to have a little problem.
I have angst.
Okay.
It's just nonsense right now. Come on, CNBC. Let's get some actual news here. I mean, so far I feel like the newspaper is beating them on news reporting. That's sad.
Correlation properties. And so right now, what's happened in fixed income the last 2 weeks, even though it's somewhat of a repricing of Fed expectations, it shows how volatile and how susceptible the fixed income curve is to that narrative, and that correlations are changing and decoupling from equity markets, depending on not just growth, but also inflation impact and how we think about that.
And we were kind of saying before, it's a nice reminder that bonds are not riskless. You know, Katie, it's interesting, as we sit here today, JPMorgan CEO Jamie Dimon addressing analysts, saying two things. Markets do not stay high forever, being one of them. And the other is that cash is a very valuable asset in a turbulent world. Cash is actually kind of controversial right now. How do you feel about those comments?
I mean, I'd have to say that I agree with him in the sense that in a world right now where we really don't know where we're going next, and there seems to be a lot of divided signals. It's always good to be opportunistic, and from our side, on the technical side, we're always measuring what are the strength of the trends that we're seeing now, and they're very mixed right now. So cross-asset themes are definitely bobbing around, and we're still looking for what is the next big macro driver going into the next few months.
All right, Katie, really great to see you in person. Always great to chat with you. That, of course, is Katie Kaminsky of Alpha Simplex. Meanwhile, let's take a check on these futures. Of course, 20 minutes until the bells ring. You can see it's pretty quiet to a hair lower. When you take a look at the S&P 500, of course, not exactly recovering from yesterday's losses, but still a very, very volatile past week. You take a look at the NASDAQ 100, your big tech.
Oh, interesting. Okay, so Jamie Dimon talked about... interesting. Some people don't like his tone here. Okay, so suggested bank is maintaining a modest buyback. However, that could end at any time. And then he says market levels are at least slightly inflated. Interesting. So a little bit of a cautionary note there from Jamie Dimon. And that their 2025 estimates looked a little toppy. Core goods largely stable. Services price increase dropped from a jump in August. PPI today doesn't really move the needle. That's fair. Okay. It's interesting. JPMorgan was green. Did it just go red? Oh yeah. It just went red. That's very interesting. 10-year treasury's up 1 basis point. Gold's up 92. And oil's down about 77. Okay, interesting. Jamie Dimon. Cap requirements. Last few questions. Cash is a very valuable asset. He cites Warren Buffett as an example. Interesting. Yeah, he sounds bearish almost, huh? Almost like you have to be bullish as a CEO, but he sounds a little bearish. Cash is a very valuable asset in a turbulent world. References Buffett. Very interesting. So to me, these are somewhat, I'll call it either cautious or bearish undertones here. I mean, think about that for a moment. So you're talking about treacherous geopolitics or geopolitical situation. Cash is very valuable. And then reference to Buffett, who's been selling Apple, B of A, and holds a lot of cash, etc. That is very interesting. Huh. All right, let's look at the yield curve. Jamie Dimon's chances of being in government are almost nil. He's We're now 13.2 basis points uninverted. Remember, the pain 50 to 90. That's when things go nuts. We're now 13 BP uninverted. Pain historically hits around 50 to 90. Interesting. Okay.
It's a good place to start. That's exactly where we are, David. You know, you looked at the numbers this morning. They beat. How much more upside is there really to a stock that is already trading at 2 times its price to book?
Good morning, and that's right. The stock, and most notably JPMorgan, is not cheap. The stock is actually 2.3 times tangible book value. So, to some degree, there is a premium that is warranted, given how well the company's executed. But again, companies and stocks are not always the same thing. And from our standpoint, 2.3 times tangible is just too rich. In fact, the company tends to agree to some extent. I think some of the volatility, Chanali, this morning, I think was around the earnings call. Jamie Dimon noted that buyback expectations may be a little too optimistic. And we believe that is the right way to think about allocating capital and to think about buybacks more on an opportunistic basis rather than to buy at any price.
And Jamie Dimon also sounding a little bit cautious on the economy, talking up cash, for example. And also, you take a look at the results. It included a $3.11 billion provision for loan losses, a $2 billion in net charge-offs, amounting to a roughly $1 billion reserve build. I mean, wrap it all together. What do you make of that?
Well, I think that really reflects more of a normalization and just preparing for the economy to slow. And I think that a lot of market participants may get excited about this reserve build in the context of over a $2 trillion balance sheet, and $1 billion build in reserves is just not that meaningful from our perspective. They've got the earnings capacity to add to it. So from our standpoint, it makes sense. And I think as unemployment goes up, it's very reasonable to assume that charge-off activity at JPMorgan and the banks, by and large, should go up, and that is not necessarily a cause for alarm. More really just a normalization more than anything.
You know, David, the simplest level net interest income is the difference between money paid on deposit and money made on loans. But do you have any insight as to how the bank can shape net interest income, the path going forward? Because last month they warned estimates were too punchy, and of course today they easily beat those estimates.
Yeah, so I think, Mike, from our perspective, in thinking about kind of the moving parts within the JPMorgan net interest income guide, loan growth plays a big part of it, but I think the rate picture changed a little bit. I think JPMorgan and Wells Fargo actually are both what we would call higher for longer stocks. So given that they're a little more asset sensitive than some of the regional banks, to the extent that rates stay a little higher longer, I think that Pinto's comments a month or so ago was under the thought that we may get 250 basis point cuts in the fourth quarter. Now that the forward curve suggests maybe 1 or 2 25 basis point cuts, I think that gives them a little more comfort around the net interest income outlook on the near term. And I think the upside or downside in 2025 is going to be a function of what the curve does, as well as loan growth. And they were fairly cautious as it relates to loan growth, at least here in the near term, particularly in that middle market corporate bank.
Hey, David, you know, you looked at the numbers today, and one thing that really helped JPMorgan at the end of the day was their credit card business when it comes to really leaning in, extending loans there. But at the end of the day, what does that mean for any potential read-through for what we might see? You don't see that large of a business there at other banks. So what would they be winning from? You have Bank of America coming up and a whole host of regionals.
Yeah, so you're right. The card business is really an oligopoly. So you've obviously got the likes of Capital One and Amex, which we cover as well. B of A is in that business. Citi is in that business. So I think that the read-through for the regionals for next week, and both Wells and JPMorgan had kind of a net interest income report and outlook that were maybe a little better than feared. I think that you're going to see a similar pattern at the regional banks next week. And I think that given that those banks are more leveraged to net interest income, I think that bodes well for those stocks as we get the regionals to report next week.
Yeah, and of course, we were talking a little bit yesterday with the CEO of KBW about how there doesn't seem to be a lot of fear-mongering about CRE when it comes to the regionals lately. You had a bullish note out from Citi saying that, they haven't really materialized. I mean, what's your thinking on CRE? Does that still pose a risk, or can we safely put that in the rearview mirror?
It does, Katie. It's still a risk. But as we said 18 months ago when market participants were freaking out about CRE, it is a very long tail, which is a good thing for banks. It gives banks the opportunity to restructure loans, to write down loans over a 2, 3, and 4, 5-year period of time. Banks have the benefit of time as these CRE loans get worked out. We felt that the market was overly worried about it. I think that there's maybe a little bit of complacency around CRE, but we're encouraged by the trends there. We're also encouraged by the amount of capital that's been raised by the likes of Apollo, Blackstone, KKR to buy distressed real estate. And that really, as you know, finding that bid-ask spread and finding an equilibrium there is really the key from our perspective with respect to working through these CRE issues. So it still is a risk, but a manageable one in our view.
David, we thank you so much for your time this Friday. That is David George of Baird. Now, Bloomberg is going to bring you the latest on bank earnings. The Wells Fargo CFO will join the close at 3 p.m. And also, I want to give you an update on this JPMorgan earnings call as well. It's getting pretty spicy, guys. You have Mike Mayo over at Wells Fargo saying that, Jamie Dimon is talking about government more than ever before, asking him if he wants to be in office himself. Jamie Dimon kind of pushing back here and says that's wrong. He says, I'm probably not going to do it. So that is actually pushing back. Probably.
I might not.
Yeah. Well, we heard the same thing from him, 2 days ago?
Okay, yeah. We're going to take a peek. Yeah, well, Jamie was on 2 days ago. That's true. On Bloomberg, too. It was actually kind of interesting that they had that right before this. But Mayo's now asking JPMorgan about JPMorgan enjoying a tech-like valuation. Jamie Dimon says you have to judge us over time. Credit card spending. Not seeing a spending weakening in retail. Overall spending patterns point to still strong. No landing scenario. Lower rates, any signs of more borrowing? No. Yeah, we kind of touched on some of those things overall. So far, that looks fine. Looks like the yield pricing just flipped again a little. So you've got now just an 82.8% chance of a cut in November and a 75.7 or 75.7% chance of 2 cuts by the end of the year. So you did just move that down a smidge. 10-year yields up about 0.8 basis points. 2-year yield is down almost 4 basis points. So steepening in the yield curve again. Okay, and we do 5 minutes to the opening. Somebody's asking, what's the next line on Tesla? Well, this one right here. Wow, look at that. Within 6 cents, you just bounced. My line's at 221.26. After that, I've got a 218, and then I don't think I have anything. I mean, I think we added a 200. Yeah, a loose one at 200, but really the high 190s. But you probably hold 200. Sorry, you probably hold 220. I mean, we'll see. But a little bit of red in the day going in here. DJT's starting to rotate a little bit. No, it's still pushing to the upside here. Yeah, a little bit of volatility, but whatever. 4 minutes to go. What do they have?
Deserves this more than J&J. They've really gotten so many of the plaintiffs to agree, David.
That's a big statement you just made there.
Well, because they got about 83% of the plaintiffs to agree. Okay. And it's in Texas, which means that it's out of Jersey. It's not in Jersey, where I thought they would lose. I knew they would lose if it was in Jersey. But the fact that it's in Houston is very pro.
What is the discount that's that's still embedded in the stock as a result of concerns about this litigation?
12, and it's only going to be around 8.
12 billion.
I thought it might go up to 12. I don't think it will. Multiple years will not. David,
how are the
barely,
fundamentals for the business?
That's why I'm glad you mentioned it, because the fundamentals are excellent. It's been really kept down by that. But remember, Merck hasn't done that well, and we didn't even get to talk about Pfizer not doing it. Unless you have GLP-1, everything's disappointment. But I really like J&J.
It's kind of like, yeah.
And
it's all about Lilly in one world, and it's all about NVIDIA in the other.
God, you're good.
I am.
Why? You know.
Look at this. Let me try to plug it in again. I don't know what problem this is, but I see if it works. That's hilarious. I don't know if this is true. It probably is. But Zero Hedge quotes in a tweet Jim Cramer. Come on. I don't think it's gonna make it. Yeah, no. It's just that's got to be the cable. All right, I'm gonna order a new cable right now. But anyway, they basically quote Jim Cramer, and the quote is, "You have to come in China stocks right now, October 2nd." And then they said that's the top, and they've been down since then. Oh, Jimbo strikes again. No. All right, let me get another HDMI cable. I don't know how this stuff just breaks over time. All right, let's try to get that handled. Free delivery today, 5 to 10 p.m. Same day delivery. Man, that's going to kick the margins in the bahoonies. Qualifying orders over $25. I don't have a qualifying order over $25. My order is $8. Oh, but I do need to replace that. And then, because I have a broken one. Okay. All right. Proceed to checkout. Wow, that's crazy. So it's 6:30 a.m. and as long as I order by 8 a.m., I'll get the product by 5 to 10 p.m. Same day. Bro, they're going to take that in the margins. That's crazy. I'll take it though. Wow. Yeah, that's one of the things I said about Amazon for a while is like, and don't get me wrong, I like Amazon, but I've complained for a while. I'm like, man, like they're going to go from 2-day shipping to 1-day shipping to same-day shipping to 2-hour delivery to 1-hour delivery. It's just going to keep trying to get faster and faster and faster. And the problem with that is it's just going to cost exponentially more and more money. Oh, Amazon. But like I said, I'll take it. Whatever. All right. 1 minute to the bell. So hopefully you enjoyed playing bingo yesterday. I'm gonna put edit next morning. I did not get bingo. Rip. All right. I'm in New Hampshire and I ordered something at 10 p.m. and the next morning I had it. Yeah, it's crazy. Yeah, they're putting all these people to work at like 2 a.m. It's crazy. Amazon returns are mind-blowing. I could not imagine working the returns department. Could not imagine. It just sounds crazy. All right. We're gonna get the bell now.
NVIDIA ringing the opening bell after crashing.
Oh, NVIDIA's ringing the bell. Wow. Look at all them billionaires right there.
I think people have to understand that he's had a three-day roadshow. That's why the stock's been levitating. Speaking to all of the big accounts that own the stock, he's very loyal. If you want to hear what he's been saying, you go to the Tech Unheard. That's the podcast of Renee Haas, who used to work at NVIDIA, now works at runs ARM. Here's what I think he's been telling you. Ellison needs every chip. ChatGPT needs every chip. Zuckerberg needs every chip. Musk needs every chip. Jassy needs every chip. The demand is so unbelievable here that we have to recognize that this is a multi-year phenomenon, not one iteration, not two. And he says software...
As Jimbo is pumping it, the stock is actually rising right now. Multi-year generational opportunity. It sounds like 2001 all over again. Anyway, yeah, that's a pretty nice candle, though. I'll give him the big stick there. That's a nice stick. It's a good-looking stick. Nobody knows big sticks better than I do. Okay, so then we got the Qs. All right, a little bit of a droppy doppy there on the Qs. Oh, Jamie Dimon's JPMorgan went up again a little. DJ Tizzle trying to rise again a little bit. Okay, so the banks are actually doing well here. Q's trying to, there we go, get past their initial little sell down there at open. Possibly dragged down by Tesla. Tesla's at the 218 right now, down about 8.5. It really needs to hold that. I don't have any more lines for it, so it's gotta bounce in this range here. Otherwise, it gets a little poopy. Bitcoin is really happy right now. Apple. Oh, Apple had a little red candle, but Apple's at 228. Like, it's doing fine. Like, yeah, it has fluctuations, but who cares? Enphase is positive. Qs, there we go. Pump that green candle, NVIDIA. Bump it up. We've got to bump it up. Oh, Tesla needs a pump. Somebody pump up Tesla. Okay. What else is going on here? Hey, Domino's Pizza is up. There's the... Wow, look at that. Interesting sort of double here. Wow. Same exact spot, basically, on a peak. That's crazy. And that's on the week chart. Yeah, 3 years later. Wow. Amazon, near all-time highs. But kind of the same thing. Disney up a smidge. A little smidge. Tesla, is that a recovery on Tesla, I see? Oh, by the dip, here we go, Moon. Watch, it goes green by the end of the day, let's go. It's got a whole 9% to move, let's go. Here we go, second green candlestick to the moon. Oh, rejected by the 218 gray line. Oh, not the 218.43 line. Come on, man. You can green past that. Get back to 221, you little weenie. Get back to 220. Come on. Up. Up. Yes. Yes. No. Ugh. It's a heavy lift. It's a heavy one. I'm just going to come back to it in a little bit. Oh, the Jim Cramer NVIDIA pump has reversed. Bum, 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 bum. Enphase still hanging on to green. And Bitcoin's still happy, going up to the 61.7 resistance. 61, 741, the resistance. Okay, when they said 10-10, I didn't think they meant 10%.
Lost the lead.
Damn. 10%. Come on, man. I'm sure it's got to bounce off the 10% line now. There's no line there. That's just like psychological. It's down 10%. Okay. Interesting. Meta's playing sideways. Well, there's always Palantir. That one just keeps going up. Yeah. Oh, there's your... Oh, that boy. That's all intra-minute right there. That's crazy. Some crazy moves. Q's moving up the last few minutes here. Q'sy doozies. Celsius, 3%. Robin the Hoods. Spy's actually green. Spy don't care. Costco. Almost $900 this sucker. That's crazy. What a ride. Oh, Tesla's recovering. The bottom is in. Oh, another green candle. It's all going to the moon. All right. Let's see what the rest of the news is. Oh, Enphase lost the lead.
Lost the lead.
Yeah, it did. Look at that. 98 now. Jeez. Oh, whoa. Look at that Bitcoin rejection. Oh, if you don't have Kevin's lines written down, what are you doing? Nobody knows lines better. Nobody knows. I do lines every day. Nobody knows how great the lines are until you come over my house. I mean, until you look at my Weeble. Get 75 free fractional shares with metkevin.com/Weeble. Paid promotion. Meta goes negative.
Lost the lead.
Apple kind of slipping a little bit too. Palantir's not though. Palantir wants to keep running. Look at that. Pretty nice. Oh, back to, let's try again. 218, here we go. Come on. Print with the calls. Print with the calls on the dip. Come on, baby. You can do it. You can do it. Come, my friend. Oh. Come on. Oh. All right. Let's go see what else is actually news. Oh, here we go. 218. 3 minutes of bull. Let's go. Okay. Let's see what else is going on. Subdued Delta outlook puts airline recovery at risk. Slow recovery from challenging summer season. I almost said slumber. Actually, I think I did. Okay. Delta Airlines forecast profit and sales short of Wall Street estimates. But I don't think it was a big miss. I think it was like 1% or something like that. We calculated the numbers the other day. I don't remember it being like horrible. Come on, Tesla. You can do it. You can do it. Get through the line. You're so close. There we go. Now close above it. Larry Fink, what does he have to say? There you go. That's good. That candle's going to close above it. That's good. Might mean it's going to 222 next.
Stronger capital markets with fewer public companies. I don't look at that as a problem. I look at that as a plus. At the same time, we will see as more and more private companies have more and more access to private capital.
They're never going to go public.
No, I would say the opposite. One day they are going to go public because they're going to want to expand the ownership beyond the few. And that's what BlackRock did 25 years ago. I mean, we only had a number of partners, and when we did our IPO, everybody got shares, all the main leaders of the firm. So I don't see that as an outcome. I see this is a natural evolution. I think what we are seeing, though, because you do have access, in the short run, you are delaying when you go public. But the reality is, when you go public, you're a larger cap company. Yeah. And so what we're witnessing now, and when BlackRock did its IPO, I mean, we did it, our market cap was $1 billion. I think it was $980 to be specific. And now what are we, 145 billion or whatever it is?
So that's a great point, and it's got talked about a lot this week, this delaying effect, right? But are you then arguing that the IPO market long-term gets more stable, new issues are more stable, and hence, I don't know, less risky?
Well, I don't think IPOs are that risky, depending on the companies that are coming there. I don't think there is a less risky time or a more ebullient time. I think it's the quality of the companies that are going public will determine that. But I do believe there's you're going to see great private companies that are going to want to go public and want to expand. I mean, it's hard as a private company to do M&A. And if you believe that your moat can get larger, you can expand globally better, you're going to go public in doing that. I mean, I do believe the way we've used our public equity, I mean, you know, back in 2004, before we started expanding through inorganic opportunity, we were a bond manager. And we took that to expand. Milim was our first big, giant one where we expanded globally, and then obviously BGI, but even eFront and Aperio, all these different transactions, and now Preqin and GIP. So all of these are just a part of it. But, I mean, think about what we did. So we added $2 trillion organically over the last 5 years. $2 trillion is equivalent to being the sixth largest asset manager, and that was all organic over the last 5 years. And so I think it's the breadth and depth of what we're building in terms of whether it's active flows or ETF flows, private markets, public markets, digital products, and on and on. And
everyone loves Larry, right?
Very pleased with how we are doing this and the breadth of our growth.
Now, I do want to talk, we all agree capital markets are largely going to replace the banking market, but I want to worry about something else. I need your advice. I see the government, the Justice Department, going after Google, one of the finest companies in the world. They're going after Apple, one of the greatest companies in the world. FTC going after Amazon, a great equalizer. Is the government a force of good or bad right here?
I'm not in agreement with the government. They may have more knowledge than I do, so I can't speak about the specifics. But at the same time, we say that we have a competitive advantage right now against China. And, you know, the key is about our relative strength in technology. And it seems odd at the same time, we're becoming more and more dependent on our technologies. And we're now talking about breaking up these technology companies. It doesn't feel consistent to me. But I don't know the intricacies that the Justice Department is looking at. But I you know,
theoretically.
And importantly, though, you know, breaking up a company may not be a good or bad outcome. You know, you've seen that. You know, if you own all the breakup of AT&T, you would have done really well over time. There are many examples of that. But I like the U.S. position in technology, and it seems odd that we are now questioning the scale of these companies. These companies actually are going to get quite a bit larger. I mean, we're working with them through our new partnership. We're working with Jensen. We're working with all these companies right now, and the U.S. moat is getting larger and better, and we have a huge opportunity to be there. And the question is, are we going to be the country that distributes and diffuses AI technology? There's a lot of books being written on. It's not the country that creates the technology, but the net winner is a country that diffuses the technology. And to me, we want...
Oh, I've heard of that before, because then you're in control of sort of the, you know, who uses it and its growth and otherwise. JPMorgan, by the way, is up 3% right now, which is not bad. Wells Fargo's up 4.5%, also not bad. Amazon, these on bank earnings, Amazon up 60 bips. Alibaba down about 45 basis points. Taiwan Semiconductors is up about 2%. You have Bitcoin sort of bobbing around. Tesla's sitting on top of the 218 line. It's really trying to recover. And it is pushing up. Nvidia is slightly negative. The Qs are trying to grow here. Palantir's starting to sell down a little bit. 44.38. Isn't that all time? Yeah, that's all time high right now. Yeah, all-time high. But seems like things are mostly pretty stable right now. It doesn't seem like major flips here in anything. 10-year yield seems to be flat. 2-year yield is down 4 basis points. Let's see what the Doomers have. Nothing. Okay. Well, I'm going to go make more coffee. Good luck today. We'll go to the course member live stream soon. Thank you so very much for hanging out with me again. I don't know why you do it. but I appreciate you. Somebody here says, I just sold all my Palantir with a 75% profit. I feel like Palantir is one bad news away from a major correction. Well, congratulations. You may have sold at the top. And good job on taking the profit. Happy for you. Now, how are you going to reinvest it? I know what you're going to do. You are going to sign up for stockhack.com. Yes. Take some of those profits and work with myself and the team to figure out how to allocate your money. Sorry, shameless pitch. Yeah, I've got a long morning. Yesterday we were working with StockHack clients, and then I've got another. We got a lot to do today too. working with clients, so it'll be fun. But anyway, congrats, sir, and appreciate y'all. Thank you so much, and we'll see you in the next one. Thanks so much, folks. Goodbye. Good luck. Not personalized advice. Goodbye.